with Rajiv Rajgopal, Managing Director with Akzo Nobel. Rajiv, good morning. Thank you for joining us. Now, when we spoke to you last time, you were talking about the challenges in the sector, largely because of inflation and what was happening because of the rural demand. How has the construct for you? How has the quarter been for you?
Good morning, Nikunj, and good morning to all our viewers watching ET now. Look, as far as the last quarter is concerned, we reported our numbers. We've reported close to about a 7% growth. What we've seen is two things, Nikunj. A bit of a K-shaped sort of a recovery, where we are seeing a higher consumption of premium, and really surprised, really a large part of it really coming from our rural tier 3, tier 4 towns. In my view, if you look at the strategy that we have really embarked upon, and we are going to really take it to the next level for the strategy period 24 to 26, is really focusing and dialing up our premium portfolio, because that's really what sort of makes sure that we are able to play profitability and make sure that we are able to invest behind our resources while focusing on adjacencies in the paints part, and also dialing up our distribution on the paints part. Our coatings business have done very well. Obviously, I was watching your earlier show, and really infrastructure seems to be really having a huge uptick, and certain vectors that you really look at, whether it's the dialing back of the real estate, etc., has obviously lent itself to our coatings business doing well. Automotive has had a great quarter. I think you've also reported the results with many of the players. And obviously, wherever we play, we don't play in the OEM, but in the aftermarket, we are seeing a very high double-digit growth. We also see it in some of our segments like powder and marine and protective. So all in all, it's been a bit sort of a tough quarter, because really we were hoping to get close to double-digit. But really, when you look at all the players, we are pretty much there. We continue to hold our market position. And for us, really, it's about really building the roadmap and making sure we start moving to becoming the fastest players in the industry.
My next question is about, revenue growth 6%. But on your base, if I look at the revenue growth of 6%, absolutely good news. Relatively, some of your peers have got a much larger base. They've done similar growth numbers. I was hoping that on your base, the revenue growth number should be much higher. Is that a fair assessment?
That's a fair assessment. I think there are parts in the... So let me break it into paints and coatings. In the paints part of the portfolio, I think we've still got a lot of dial-up to do on our mass market and our economy range, where we've seen a higher growth coming from the industry. In our coatings business, our industrial coatings had a one-off last year in the, where we had a huge order, which sort of obviously it's time-based, and that sort of got executed. And hence, there's a slight correction there. And also in some of our export orders, particularly to Sri Lanka and Bangladesh in that business, there is a bit of work that had to happen there. But I'm fairly confident going forward. The teams are sort of working on it, and hopefully in the quarters ahead, we should be able to start seeing, again, moving up. Nikunj, if you look at the last fiscal, we had the AGM yesterday, and we were pretty pleased, because it's after many years, we've really become, in the top 2 in terms of incremental growth. So from our perspective, you are absolutely right. The focus is really saying, how can we continue to be the first, the top 2 in terms of growth? And that's where we are really focused on.
Rajiv, you said you were trying for double-digit growth, but it was a bit disappointing that you couldn't achieve in this quarter. But as we head into Q2, Q3, which are seasonally better, do you expect that double-digit growth to play out?
So, Anisha, I think it'll take a bit of time. See, Q3, if you really look at, it's a bit of a quarter where some of our large geographies in the month of July have slightly got impacted with the monsoon excess that happened. But yes, I think from a trajectory perspective, I do see that we start moving in. I'm certain that between Q3 and Q4, we will start seeing the growth really come back, because fundamentally, I think the enablers have put in place, and some of the strategies seem to be working, which clearly also was reflected in the current quarter. If you look at our coatings business, we seem to we've got a very good order book, which is coming across most segments. Even in our projects business and paints, we've got a good order book. So hopefully, we are fairly confident that we should be able to sort of make sure that we start sort of living up to our promise of moving to the top 2 in terms of incremental growth.
Rajiv, everybody is now curious to understand that there is Grasim and there is Jindal. Has the industry started feeling the heat of intense competition or increased competition or new entrants?
So, Nikunj, look, I think let me take the Grasim a little later. I think let's first look at the current construct. I mean, we've got players who've come in. There are players who obviously are doing well. But that said, if you really look at it from the last, almost about 12 quarters, I think the incremental growth of the top four players have sort of only sort of got strengthened in a way. So to me, I think in a paints business, I think building brand distribution, having an efficient supply chain, etc., are strong levers. You also work with an applicator. Yeah, you work with a painter contractor, so that relationship and making sure you sort of dial it, using digital as a platform for driving efficiency and costs, etc., are also key enablers. So I don't want to get into specific company and sort of talk about it, but suffice to say that look, other than an odd player, we've not seen too much of traction of players who've launched in the markets that they had already launched in terms of sales from existing outlets, and that's where we've been able to bounce back. If you look at the last 5-6 quarters, every quarter has been a record. So that clearly tells you the first part. Now, in terms of the newcomer into the industry, I think we'll have to wait and watch. We'll have to see what the play is. Of course, it's a formidable player in the industries that they have taken part in. But we've already working on a strategy. From our perspective, we've got a very high market share in the paints business in terms of, and they're largely entering into the paints business in the premium segment where brand Dulux, for consumers who use brand Dulux, Nikunj, I'm sure those of you who use and you use Dulux will say that, look, it's a terrific paint to use at home. I think the challenge for us is really how do we sort of dial it up? How do we dial up our brands much more and get entrenched into the minds of the user? And that's what we are working on. So what are we doing? We are going to be launching in a few weeks our Dulux Assurance 2.0, where we are reinforcing the quality of our products by giving a warranty of about 5 years. And there are obviously certain conditions that would apply, but really we are dialing up the quality because we genuinely think that we are the best in class in quality in the industry on the paints and coatings that we offer to our customers and consumers.
Rajiv, sorry, just to interject there, I think what Nikunj was trying to ask you was with respect to the increased competition, how will the margins pan out given the fact you're making new launches? All of that will need a lot of investment in your advertising spend as well. Crude prices are no longer as benign as they were. Of course, increased competition coming in. All of this, what does it do to your margins?
So look, I think from a margins perspective, I've stated that we would be at double-digit margins. I think both from India perspective and from a global perspective, I think we're very clear that our focus is really going to be to make sure that we hold and start growing our market share without diluting our margins too much. What do I really mean? We are at a comfortable double-digit margins over the last few years. We want to hold that, so we don't want to sort of reduce that. And there we are working on a lot of cost-effective programs where we are looking at efficiencies in our supply chain. We are looking at digital. We brought IoT into our factories to drive productivity. So really, margin management and productivity are two big themes we are working on to make sure that we are able to fight the battle. Now, look, if there is a price war, of course, certain assumptions will change. So that's another assumption that we are working on. So we are doing a scenario building, and in the scenarios, let's assume it's an extreme, which is assuming a significant price difference between a new player and us. Again, we'll have to see what that means. We had a player who came with a proposition which in a way was trying to erode margins. But if you look at the last few quarters, nothing has changed. I mean, our margins have held and in fact better. So even if I were to take out the easing of the raw material or the softening of the raw materials, which has come in the last couple of quarters, the underlying margins are still very strong. So we are doing scenario building, Anisha, and I think I would be in a better position to answer this question maybe in a couple of quarters when we get to understand what exactly the proposition that the new entrant is likely to bring in.
Okay. Well, Rajiv, appreciate your time. Thank you so very much for joining us. It's turning out to be a good day for Dabur. It started 5% higher, not holding on to the days against, but still 3% higher after all that nonsense which happened in social media about their honey and there's honey having some cancerous properties. Stock market, sometimes they react to funny things. That's what I can say. And that's what happened to the Dabur stock yesterday.